From the massive studios in Raleigh, North Carolina, this is the Cloudcast with Aaron Delp and Brian Gracely, presented by A Cloud Guru, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We're coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. This is Aaron. In case people forget what I sound like, it's been a little while since I've been on. I apologize. And actually, no Brian this week. But we have both Cloudcast alum and super interesting guest this week. Jesse Proudman, founder of Strix Leviathan. How you doing, Jesse?
I'm doing super well. Thanks for having me on.
Absolutely. So let me give everyone the quick background here. We actually met, it was the first time you were on the podcast, at the OpenStack Summit in Hong Kong years ago. It was my, and that was the first time we ever met, and it was really awesome to get you on the show. And you had some really awesome takes on the community and everything that was kind of going on at the time. So it'll be really good to see kind of what you're doing next, because, we've all kind of at some point moved on, so some of us, like for me, more than one job. But tell us a little bit about the last few years for the longtime listeners that actually remember from Cloudcast 116. You had a great time at BlueBox. You had a good exit. You went on to IBM. Tell everyone a little bit about that journey before we get into the new stuff.
So Hong Kong was November of 14, if I remember correctly.
It was.
And we had just raised our Series A, I think December of the year prior. So basically had just sort of set out on building our product. And Hong Kong was our launch event for BlueBox. And it was an interesting time for the company. We were both proud of having the product built, but we were desperately low on cash, which was kind of interesting looking back historically. And we had just taken a bridge note from our investors. So sort of mixed emotions going into that event. The preceding sort of year or so it was 13. That was November of 13. So the preceding year or 2 years were pretty wild. We ended up raising some additional capital in February of 14, had a new CEO join us in May of 14, went through an acquisition song and dance that whole summer with a group of different potential suitors. Ultimately ended up raising a Series B instead of being acquired, and then began our conversations with IBM in February of 15, which led to the acquisition in June. So it was a pretty amazing experience and just unpredictable. I mean, I think all startups are unpredictable, but sort of the highest of highs and the lowest of lows all condensed in a very short time span there. And the IBM acquisition was wonderful for us. Everybody on the team was thrilled to be part of a company like IBM. With our product, we always felt really good about the technology. The BlueBox Cloud OpenStack offering worked really well, and all of the customers that we had on the platform loved it, but we just struggled to get sales traction. And I think part of that was due to being a small venture-backed Seattle startup, really where the target customer for an offering like that is a much larger enterprise. And so we felt like being part of IBM would really satisfy that sort of gap in sales capabilities that we had. And so the first year at IBM was fascinating. I spent that year traveling all over the globe, meeting customers and other team members from IBM, and really building brand awareness inside of IBM. It's pretty fascinating going from a 65-person startup to 400,000. And so much of my job basically became selling the product to other IBM teams, whether really sort of from a top of mind perspective. So that went well. We had a bunch of additional technical development work we did sort of in that time at IBM. And really enjoyed it. Learned a ton through that experience. After about 2 years, sort of in that role as distinguished engineer working on that product, started to get the itch just to do something else. And in total, I started BlueBox in 2003. We were acquired in 2015. So in 2017, it's a long time to spend in a single domain, focused on a single product, and was ready to do something new. And so got connected with the IBM Ventures team and spent much of 2017 as an EIR working with them on some new programs and ideas. And that was great in a totally different light. It's fascinating to see how venture programs operate in a company like IBM, how they think about bringing new sort of startup-focused programs to market. And
Jesse, real quick, define EIR, because I know what it is from reading about it, but just for the folks that don't know.
Yeah, so an EIR is an entrepreneur in residence. You typically see this at a venture firm where they have a portfolio CEO who's had an exit and is sort of thinking about what they're going to do next, but doesn't quite know, and so they generally hang around the venture firm and look at ideas and meet teams and just sort of think about what they're building next. And so I had that opportunity inside of IBM to do something similar, but was focused more on entrepreneurship. So what are programs or initiatives that we can launch inside of IBM that would help the company versus starting a new business. So that was a great experience. Really enjoyed the opportunity to kind of think about and get exposure to what launching a program like would be like inside of a company of that size.
And was this so at least, externally watching you through the Twitters and we did catch up a couple times over the last couple of years at various shows and things. This almost felt like almost like a hobby or a research project that turned into a passion, which turned into the next thing. And so tell us a little bit about that journey of going from entrepreneur in residence at IBM to actually founding Strix Leviathan. And then let's really start to dig into this intersection of AI and cryptocurrency. And for those that aren't familiar with that, by the way, we're going to have like a speed round of what the heck is cryptocurrency as well for our audience. But go ahead and start with that.
Yeah, absolutely. So you're exactly right. I mean, I think the work I was doing with IBM Ventures was largely focused on sort of blockchain and some of the items that IBM's doing with blockchain, which for all intents and purposes does not include any of the cryptocurrency piece. IBM is focused on Hyperledger and on sort of blockchain as that distributed database technology that can underpin replacement of business systems. And so as I was spending time learning about that for IBM, started to just become curious about the currency side. And I went to college with two folks that have been in the space for years, Nick Carey, who's the co-founder of blockchain.com, and Eric Voorhees, who's the founder of Shapeshift. And so I've been following along what they've been doing, and both of them are on the finance side. Blockchain is a wallet company, and Shapeshift is a sort of a distributed exchange. And it's always piqued my interest, but never had the time to put sort of the intellectual investment in to understand everything about the space. And being able to kind of begin to have that time last summer, and spending sort of hours learning about blockchain, hours learning about the cryptocurrency side, it really piqued my interest. And you're exactly right. Sort of from side interest to hobby, sort of nights and weekends last year, began dabbling with every sort of technical component of this space that I could. So set up mining rigs to mine cryptocurrencies, was doing sort of speculative trading on the side, just trying to figure out all the different pieces that make up this space. And as I got into October, November, and December, really started to get passionate on the currency side. Knew that sort of blockchain to me as a technology, I think that's a 3 to 7 year adventure for folks. We're just at the beginning innings of using that. So all these startups that are sort of moving digital rights management onto the blockchain, or are moving, I'm an advisor to a company that's moving sort of like your resume to the blockchain. Like, those are really interesting businesses to me, but I think it's a multi-year journey before we figure out sort of the winners and the losers there. The currency side is happening right now. It's been happening over the last couple of years. And so that was really interesting to me, having spent sort of 15 years building a business and trying to find a market and waiting for that market to appear and then capitalizing on that market once it did. Walking into something on the ground floor, sort of second inning, as I like to call it, and knowing that there was an opportunity to build a business today that would have customers today, that was really exciting. And that started to get sort of my entrepreneurial juices flowing in those last couple months of 2017, ultimately to the point where I decided to leave IBM January 1st and go try to start this new company.
So let's start at the start then. What is, in your definition, cryptocurrency, and how is it different from blockchain?
So we'll start with blockchain. Blockchain is a technology that provides a distributed immutable ledger. So that means today when you interact with your bank, they store transaction records, what you deposit and what you withdraw, in an internal database that is sort of proprietary to that bank. Imagine if you took that database and distributed it all over the globe so that no single entity maintained sort of the entire database, that it was copied across computers all over the globe, which prevents it from being turned off. And then now imagine that you can't, that sort of it's amend only. So once something is written to that database and distributed all over the globe, it can't be changed, which when you're talking about a ledger, that's what you want. So blockchain provides the technology to do that. Cryptocurrencies then essentially are a unit of account, or a sort of a token that sits on top of a blockchain that allows for individuals to transact and to exchange value as a currency riding on that blockchain itself.
Got you. So blockchain is the storage medium, and cryptocurrency is the actual value. Is that a kind of a correct statement?
Yeah, I think that's a good way to think about it.
Okay. And what does cryptocurrency use as its basis for value?
You know, it uses essentially a Bitcoin. We'll talk about Bitcoin predominantly in this conversation. People should realize there's now 1,500 of these currencies that exist out there.
That many? Wow.
Yeah, it's 1,500
I didn't know there
now.
was that many.
Yeah, Bitcoin was the first, and it is the largest by market cap. But now there are 1,500. So for this conversation, let's talk about Bitcoin. The price of Bitcoin, or the value of Bitcoin, is essentially set based on exchanges that are trading it. So whatever the spot price is on those exchanges across the globe is sort of the agreed upon price of Bitcoin. And so oftentimes people will look at it and say, well, it's not backed by any entity. It's only worth what people are willing to pay for it. And that's true. It's also true about the U.S. dollar. The U.S. dollar is not backed by any entity. It's only worth something because people are willing to accept it. The difference there is that the U.S. government obviously accepts U.S. dollars for taxes. They do not yet accept Bitcoin to pay your taxes. So that's sort of the big difference. But it's pretty interesting in that regard.
Yeah. And so the other thing I always hear about with Bitcoin or any really cryptocurrency is volatility, right? They've been so crazy volatile for the last couple of years. So is it, in theory, a good idea to have a currency that is so volatile? Yeah,
it is definitely true. I mean, if you look just 2017 to today, for example, the beginning of 2017, a single Bitcoin was worth somewhere around $1,000. By the end of the year, it was worth somewhere around $19,000. And then between January and today, it's dropped to $6,000. It's risen to $14,000 to $6,000. It's risen to $14,000. It's dropped to $7,500. And I think today it's hovering around $8,600. So volatility is definitely a big part of the life of anybody involved in this space. I don't necessarily think from a store of value or a transaction medium that's a thing that helps the currency. That is, on the flip side, it's the result of the fact that there are only sort of 21 million of these Bitcoins that will ever be created. And there is a lot of demand for them. And so the price rises in response to that demand or drops based on a lack of demand. It's sort of just an inherent nature of the medium. Over time, I think that price will stabilize. And there's our other in that basket of 1,500 currencies. There are other currencies that have been created to address that stability issue. So there's a whole subset of cryptocurrencies called stablecoins. And a stablecoin's proposition is that it is pegged one-to-one to another form of currency. So Tether is probably the most well-known and arguably the most controversial. But Tether is a stablecoin that is pegged one-to-one to U.S. dollars, and it may drop to 93 cents or may rise to sort of $1.13. But by far and large, you can trust that one Tether is $1. And so there's been this whole stable of these coins created to address that volatility problem. And so at the end of the day, people getting involved, they decide what they're most interested in. Do they want to own Bitcoin, knowing that it is a currency with limited supply and therefore inflationary in nature, deflationary in nature? Do they want to own sort of a digital stable coin that is pegged to the dollars that they have?
Yeah. Okay. So that's a really good background. Thank you. And so for the listeners, this one may go a little bit longer than normal because I feel like we probably needed to establish a base, knowledge foundation, if you will, that maybe we normally don't have to. So let me kind of take it one step further then. Of course, this being early days, there are struggles with just inherent to the technology and the exchanges. And I was reading an article on TechCrunch, for instance, and you actually specifically mentioned like API issues in trading on these as being problems of, okay, you do a trade, but you don't get any confirmation. And so you don't know, did the confirmation happen or did it not happen? And how do you think things like that affect the markets and then we'll ultimately roll that into, okay, what problem is Strix Leviathan trying to solve for ultimately as well?
Yeah, it's a fascinating question and one that really captivated my mind much of last year. So there are right now there's $15 to $20 billion a day that trades hands in these 1,500 currencies across a pretty significant number of exchanges. Those exchanges, by far and large, they're all brand new. Coinbase is probably the most well known. It's only been around for less than a decade, right? And so the second piece is that all these exchanges, despite the fact that they're new, they then experienced substantial growth last year, far above and beyond anything that they imagined. And so the combination of those two things has resulted in technology platforms that aren't necessarily ready or able to handle the volume of traffic moving through them. For your everyday average consumer, and even for myself last year, sort of in the speculative investing that I was making, where you may just be using the web interfaces and you're placing buy or sell orders, maybe 2 or 3 a day, that's fine. And a lot of the growth in the industry has occurred from individuals like that. If you are an institution and you are building sort of high frequency trading is probably the wrong word, but algorithmic trading into these markets, or you're looking to make significantly more trades every day, you begin to move from using those web interfaces to using the APIs that the exchanges provide. And those APIs are they're just early. I think that's the best way to describe them. And so in the experimentation that I had last year, experienced things like API timeouts when you're placing trades, or you'd place a trade and literally the API would return garbage in the response. Or you'd place a trade, you get a confirmation, and you'd go into the web interface and see that 2 trades were placed. And
developers making software is basically what you just summarized.
Yeah, exactly. So you can't trust that the API is going to do what the API says it's going to do. And you look at traditional Wall Street, like that is not a problem that exists in traditional Wall Street. Those are solved issues by far and large in traditional financial markets. They will become solved in this market. in the cryptocurrency market, but it will be years before that's completed. And so that was really an interesting question for me. Like, how are these institutions who are managing hundreds of millions or billions of dollars? I think I read an article this week that said of the 200 plus hedge funds that exist focused on crypto, they represent $3.4 billion of assets. Like, how are they going to go reliably interact with these exchanges? And I poked around last year trying to find a solution for that, and there wasn't an offering on the market. So now every hedge fund has to go build their own interfaces to these things, which felt like a silly waste of time, right? The people running hedge funds should be focused on the algorithms they're using or their trading strategy or
right. Yeah, the old
the fundamentals of their business.
Right. The old don't reinvent the wheel, but there was no wheel yet, so they have to all go build their own wheel.
Right.
It's not a known established thing. Hence Strix Leviathan, right?
Correct. So I'm like, aha, there's an obvious opportunity here. And that's exactly right. So we essentially pulled a team together and launched this company in January with the belief that we could be the institutional trading and cryptocurrency management platform that solves that problem. So our offering essentially has three components. The first is a data ingestion engine. So we pull down data from all the exchanges, we normalize it into a consistent format, and then we store it. And so that data is valuable for individuals trying to come up, or for these institutions trying to come up with their trading strategies. Once we have all that data now in place, then sort of the second column of our offering is algorithmic development. So how do you derive trading strategies from that data? I think many firms will do that on their own from the data, but we think there are firms that would like assistance building those strategies. And then the third element is, once you have a strategy that you're ready to go execute, how do you put that in place to execute orders across all of the exchanges? And the desire to execute across all the exchanges really is around liquidity. So ensuring that you have ample liquidity in whatever market you're trading, you need to utilize more than one exchange. And so being able to have a unified API, like an abstracted API that we provide that says, go place a trade for this market on this exchange, and have our system go out and do that reliably for you. That's sort of the third element in that trade execution engine.
And is this a B2B only, or is this B2C as well?
Yeah, it's a B2B only play. So there, as we looked at the space, there's a ton of tools and technologies that are focused on the consumer trader. We felt like that was a well-handled problem. We felt like that institutional trader was the group that was really missing something.
Fair enough. So tell me a little bit more about kind of the AI piece of all of this. Like, when and how does it kick in, and is it kind of doing machine learning on the fly, or is it just kind of doing pre-programmed AI? Tell me a little bit about that portion of all of it.
Yeah, so that sits in that algorithmic development silo. So sort of we pull that data down, and then we've essentially built a set of technology that is sitting there and coming up with trading strategies sort of on the fly. So if you think about how these trading strategies work, ultimately you're looking at a bunch of historical data. You can create a number of different indicators off of that data, and you make decisions to buy or sell based on those indicators. Most traders in the market today are sort of doing that, or going through that process by hand. So I look at the charts, I see a pattern, I try to correlate that pattern to the indicators, and then I now have a sort of an algorithm I've developed based on these statically defined numbers. And that certainly works, and it's definitely a viable strategy, but markets change over time. And something that you create that works super well, say in Q4 of last year, where the crypto markets were in a huge bull run, don't work as well, say, in February and March, where the crypto markets have been trending in a more bearish way. And so we wanted to have this machine learning algorithm that can sit there and essentially, for each market condition, derive its own set of indicators that demonstrate positive return. So that's really what we're focused on in that algorithmic piece in the center. Again, we think some of the clients that we'll be targeting will be doing their own work in that space, and we'll just want to use the data that we have in the order execution engine. And we think there are others that will be interested in what we're able to do with that AI.
Nice. And so just this week, you received $1.6 million, if I remember correctly, in funding. So what's next for the platform, man? What you going to do? What's kind of the larger vision as well?
It's been a pretty incredible start to the year. So, I mean, I left IBM 1/1. We basically pulled the team together in January. So it's myself, Ryan Tomeko, who is the CTO of GitHub up to 2015, is leading our engineering efforts. Lee Huffman, who worked at GitHub on their data center infrastructure, is leading all of our technical operations, all of our infrastructure. Steve Alkire, who is a Columbia particle physicist PhD and worked at CERN on their LHC, the collider over in Switzerland, he joined the team to run all our data science and machine learning initiatives. And then Sadie Rainey, who is my controller at BlueBox, has joined to run operations, so legal, compliance, and accounting. So pretty awesome team of people I pulled together. I feel honored and humbled to be able to work with folks like this. So that was January, and as we were originally just going to bootstrap the company, and as we looked at the market conditions and started to look at the legal bills that we were going to get, we realized that by far and large we could go raise capital and use that capital in the network, predominantly the network of the investors, to go have access to conversations and the information that we otherwise wouldn't be privy to in the cryptocurrency space, mainly because Seattle is becoming, but is not yet. It's becoming a hub of activity in this space, but San Francisco and New York continue to sort of lead the way. So we wanted to make sure that we had folks in those geographies that were financially motivated to really help our organization. And I think that
sense,
the first save on like V1 of the pitch deck, I think it was the second week of January, and we ultimately closed the round about 2 weeks ago. We announced it this week, but closed it about 2 weeks ago. I think it's 6 weeks beginning to end, which blew my mind. I mean, it took me 2 years at BlueBox to raise our Series A.
Sure.
I was talking to one of our advisors last night. 2 years to raise our Series A on a company that had been around for 9 years, had $6 to $7 million in trailing revenue, 40 employees. Like, we were an established business, and it just took a really long time. You take this situation, sort of second-time founder, pretty stacked team, hot space, and it transforms that entire experience. So I'm thrilled we were able to do that as quickly as we did. Now the emphasis really is on product development. We're sort of heads down now, building the tools and the technology here to get the first iteration of the platform launched. We have an early customer that is signed on to help provide feedback and to guide us as we continue the development, but spending all of our energy getting the tools and the technology and the platform built.
Nice. And so we're kind of running up against time here. So I'll ask you one last question, which is kind of related to what you just mentioned. You took by the usual Silicon Valley standards, you took a pretty unconventional approach with BlueBox, like you mentioned. The company was around for a long time, and then you kind of built a standalone business, and then went and raised some money, and then went after the exit. And so, what lessons did you learn, and what will you bring forward into Strix Leviathan from that experience?
Yeah, that's a good question. Matt, I learned so much from those 15 years. It's amazing. I mean, the biggest piece was really capital management. Particularly, and what was difficult is having an operating business with capital, with cash coming in and cash going out. We never really had the surplus of money to go invest in any new development initiatives. So we're always, we were profitable, but just barely. And so once we raised that capital at BlueBox, it was different. We got really excited. We hired
Sure.
too many people, and
right.
And so that became a challenge. Definitely approaching things very differently on this go round. being much more conscientious about the efforts, and really the realistic timeline required that once you've built a product to bring it to market. So that's a big difference. The second really was around team size. So BlueBox was 65 people when we got acquired. We had an amazing group of folks, but 65 people, that starts to introduce middle management and all sorts of different organizational people challenges. And in this go around, I'm really conscientiously keeping the design of the company. We just wanted to be small. We wanted to have a really small, close-knit group of folks where we all sort of know each other really well and have a big belief in what we're building. And that changes when you design an organization that way. It changes how you grow. It changes your strategy. It changes your fundraising approach. So that's been different. And then making sure that we've got a lot of flexibility. Flexibility in business model, flexibility in work location, flexibility in sort of like team member backups, having a single point of failure on the team, making sure that we've got redundancy and skill sets is really important. That for the first 9 years at BlueBox, it felt impossible to take a vacation, and I don't want to repeat that. Yeah. I want to make sure we've got. I think that's a single founder versus we have a co-founding team of 5. There's big differences in how a company operates between those two, and I'm sure I'll learn a lot about what it's like to have a company with a team of 5 in this one, which will be different than last time. So it's not to say this is sort of magic recipe, but I definitely picked out the things I wasn't thrilled about at BlueBox and designed around them in this one.
Awesome. That's fantastic. Well, Jesse, thank you very much for your time today. How can everyone find out more either about you or about the company and what you have going on?
Yeah, I keep Twitter updated on a pretty regular basis. So I'm just at Jesse Proudman, JESSE PROUDMAN on Twitter. We have Strix Leviathan as an account as well, which you're welcome to follow. And that's probably the best spot.
Fantastic. All right. So thank you again, Jesse. And on behalf of Brian and myself, thanks everyone for listening, and we'll talk to you next week.
Thank you for listening to the Cloudcast. Please visit thecloudcast.net to find more podcasts, show notes, and everything social media. And visit acloud.guru for all your cloud training needs.